The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed it out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Hey everybody, welcome back to another spooky live stream. It's getting close to Halloween. You can kind of feel it in the air. I'm not sure, of course, depends where you are in the world. I don't know if it's colder or hotter where you are, but here in Georgia, where we're from, Southeast US, it's fall weather, and you can feel it. I love it personally. So it's my favorite time of year is the fall time. Stocks are higher. Let's go. Nice little pushback here from the craziness that we've had in the last, 4 trading days or so. S&P 500's up 0.8%. NASDAQ's up 1.1% at one point here. Dow Jones up 0.5%. Russell's up 1.2%. I mean, the Russell guys hit a fresh all-time high yesterday, following through today. I mean, this is really constructive, bullish price action here on the indices. Really impressive. When I took this trade, when I took the NASDAQ long on Friday, my thought process was not like, oh, this is an easy, for sure we're going right back to the highs. In fact, that's never really how I take that's never how I think of a trade, right? You never, if you ever think before taking a trade, oh, this is obviously going to do this, you're in trouble. Because nothing about trading, nothing about short-term price action is easy to make the conclusion as to where it's going to go. I know that there's a lot of stuff all over the internet that will sort of tell you that from a candlestick pattern, you can derive exactly what's going to happen next. I mean, I had someone, I'm not even kidding, guys, someone on my weekend video on Sunday, they commented that anyone who bought is an idiot, and that if you can't figure out what's going to happen next, meaning they were assuming downside for this week, they said this on Sunday on my video, that you shouldn't be trading. And I don't know if that person has since watched any of my content, or you never hear from these people after, right? You hear all these really strong opinions, these people that are very upset, very angry. But then when they make a statement like that, they'll never come back and follow it up and say, hey, you know what? That was goofy of me. I was wrong. No one knows for certain. It would be equally ignorant if I told you as a listener, if I said, yeah, no, for sure we are going to move higher on Friday. That is ignorance, and it manifests itself all over the place in trading land. Anyone who speaks in certainties and absolutes, I know James quotes the Star Wars quote, only a Sith deals in absolutes. It's really true in trading too. Only bad traders speak in certainties. Good trading is all about if and then. I went to school for computer science. That's my background. If then statements are very simple logic. If something happens, then you do this. If something else happens, you do this. If else statements. Good trading is this mindset. Bad trading has to. These are words, these are things that you should eliminate from your dictionary as a trader. Definitely. Right? Certainly. Right? Let's see. Name your pick, right? These are the words of losing traders. These are the rules or the words of successful traders. Okay? If you find yourself or you see people saying price has to do this, or price will definitely do this, or we're certainly going to see this, those people are not profitable traders. Like, they're just not. Because smart trading is recognizing that if you had a coin flip that was 55% of the time it hit heads, you're just going to flip it and guess heads every time, but you don't know which ones are going to be tails. You know you're going to have losers. That's what good profitable trading looks like. This language is the language of gamblers who are not profitable traders. Profitable traders recognize there's a little bit of uncertainty all the time in trading. Anyways, trust me, bro, on God. Seriously, that is yeah, you got to be careful. Got to be careful, because there's a lot of influencers who use these words. Again, if you want to know the quickest way to recognize that someone doesn't know what they're talking about in trading, these are the words. You won't catch credible people saying price has to do this, or that I know. That's another one. I know price is going to do this. Okay. Anyways, yeah, indices are higher. Looking really strong here. S&P 500 had a really interesting candle yesterday. It looked bearish for the start of the day. Like, it looked like you were going to go back and maybe retest these lows, but we technically on the daily chart put in a really ugly higher low and took out yesterday's highs. This looks frustratingly constructive. What I mean by that is that along most people, or a lot of people, I should say, have been hoping for bigger pullbacks in stock indices and individual stocks. And there's a lot of individual stocks that I want to add to my portfolio, and just haven't really had a sustained downward move in order to build out my portfolio of stocks. I mean, I'm fine with the market continuing to move higher, but I also have mentioned that healthy pullbacks are good things. Now, I do want to give credit where it's due, in the sense that the market did do some purging on Friday. A lot of the leveraged crowd, the triple ETF, the triple X leveraged ETF crowd, the options crowd, the cryptocurrency with leverage crowd, Friday was a wipeout event. And I know that stinks for those people, and those are incredibly painful experiences. But for a lot of us, for the average participant in markets, you need those moments. Again, this is a cruel game. The markets are not a kind place, but we need those moments. We need leverage to flush out or get flushed out of the system, right? So we saw the flush out event. Perhaps that's all we're going to get. Maybe we have more downside. But for me, in my personal opinion, price action looks constructive, and I think we have a list of reasons why stocks can continue to move higher into end of year. I've made that claim on I put a social post out yesterday. I went long the NASDAQ on Friday. I think there is more upside to stocks into year's end. 2026, we'll see. But price action looks strong. Indices look like they want to move higher. The VIX is getting hit today. I closed out all of my VIX call longs. I even bought back some of my covered call, short call positions. So I am pretty long in this market. If a dip happens, a bigger dip in the stock market happens, I'd welcome it, because I could build into some positions that I like. But I think the trading side of me thinks path of least resistance for markets is to continue to see upside. My system here, we'll take a look at our scanner here for specifically NASDAQ, which is where I am long. We're getting a +8 score on the Edgefinder's new AI scanner. If you haven't seen this tool, it's pretty fun. It's basically a summary of what the Edgefinder has found across its key areas of systematizing things. It looks at technical analysis. It looks at institutional activity. It looks at sentiment bias in terms of the crowd's movements. It looks at inflation data. It looks at jobs market data. It looks at economic data. It looks at all of this stuff for us and then it generates an overall bias here. So NASDAQ is where I am long currently. I think there is upside to it. I think it can keep going. And check this out. See this little bottom section? This is brand new. We have got it working. We now have an AI summary being printed here by our system. What this is doing is AI is going through all of our data and it's generating a summary, a written report, a summary report of what the tool is finding. So we could read this. The NASDAQ exhibits a cautiously positive net edge, primarily driven by strong market sentiment and favorable economic indicators. Despite neutral technical readings, which is not the case anymore. You got to check that. Technicals are neutral. Oh, I know why this is changing. So this scans 3 times or 2 times a day. So if this changes in between that change, there is sometimes some lag on this, which is not ideal. But again, we're still in beta version with this. Sentiment, robust, supported by positive retail sentiment, strong COT data, indicating more long positioning and favorable AAII sentiment. Fundamentals, the economic score is positive, benefiting from strong GDP, manufacturing PMIs, retail sales, inflation metrics. Those services PMIs and employment show some weakness. I mean, there you go. That is pretty much what I would say generated by AI. It's pretty cool. AI in trading is common. I mean, let me back up on that. AI has been in trading for decades. It's not a new thing. Machine learning, algorithmic trading, generative stuff is not new to trading land. In fact, you want to talk about one of the most high-tech industries of the world. It's definitely hedge funds and trading, because they're constantly trying to chase edge, which is a very strong place for computer science. I mean, one of the highest paying career paths for computer science people is on Wall Street. You can make a ton of money if you are, a quant and you can program cool stuff. And anyways, the point is, when it comes to EdgeFinder's findings, we remain cautiously bullish on the NASDAQ based on the data we're seeing. By the way, if you want to try out the EdgeFinder, producer just hooked you guys up with the link. Click it right here if you want to check out the EdgeFinder. And I don't know, I think we do. James, maybe we can change the QR code on the screen to the EdgeFinder trial link. But yeah, I mean, we're changing things up here. There's your 30-day trial link on the screen. Just scan this QR code if you're watching from a TV or a desktop, if it's easier. Just fill out that form. It takes like 2 seconds, and we will send you information on the free version that you can get access to, or our 30-day trial. All that information can be found. Simply scan this QR code or click the link that's just been dropped in the chat, and the link is also in the description. But yeah, I mean, to me, I looked at this on Friday, and it was a weird one because I didn't like the idea of buying the NASDAQ on Friday. But my system and my strategy said buy, and so I did. Now, I didn't put a huge trade set. Like, I didn't go all in on my account. I never do that. But like, I know I didn't put, like a huge, allocation towards the NASDAQ on Friday. But in my stock positioning, I bought back a lot of the short calls that I had. So I am pretty very delta long on this market now. That being said, when I say my system said long on Friday, it was pretty straightforward. We had a key area of technical support that hit the 38.2% retracement. That's it on the technicals. Like, technicals are easy mode. What was more important is the fact that the EdgeFinder actually had a bullish reading at that time. Again, technicals remained in an uptrend. Seasonality remains very bullish for the rest of this year. Institutional activity looks promising. Like, we are a little bit delayed due to the government shutdown, but we also know that the latest data shows institutions have been buying the NASDAQ. Crowd is bearish right now. They got super scared. We saw that in the put to call ratio. We covered that yesterday. Like, if you're looking at NASDAQ, or just, let's say, just equities in general, SPX, went super bearish all of a sudden, right? And then we've since then normalized a little bit, but now we're back in kind of neutral territory. So again, I think that on Friday you had the fear event, the big drop, and That's basically, you know, we hit that support level. I bought right here. I was a little bit early, but my stop loss placement almost got hit. Like I almost got hit on my stop. We reversed higher. So where are we going from here? I think we're going back to highs. I think we're going to push back to the highs. I would not be surprised if by end of year we see new highs in the NASDAQ, in the S&P 500. One of the big reasons is because we are entering into the strongest period of the year, historically speaking, for the stock market. Take a look at the S&P 500's projected end-of-year route based on the 10-year average seasonality of the S&P 500. Let's take a look at NASDAQ. Obviously very correlated, so they're going to have similar movement expectations. Look at Bitcoin, right? Bitcoin looks really strong into year's end. So I bought a little Bitcoin as well. So anyways, that's, are there any AI indicators you use? Yes, the Edge Finder. The Edge Finder uses a bunch of AI. We use a lot of different services and things to help generate bias. So Nick, what do you think will happen with gold? Yeah, gold is going to be the most boring one to talk about because there's nothing to say here. Like, let's talk about this. Can you buy this? Can you sell this? Nope. Can't chase that. It looks extremely overbought. But overbought is not a sell signal, in my opinion. It looks stretched. Can you sell that? Nope. Why can't you sell that? Because everyone who's been selling that, the struggle is momentum in markets is real. When something, sorry, I just bumped my mic. When something is just trending and trending and trending, the thing in our brain that fires off that's getting people in trouble this year with gold, something in our brain, something in our human psychology is we want to say, I'm not going to get trapped buying up here because it's going to come down. It's got to come down. But like, I don't know how else to, I've said this 1,000 times. I'm not even kidding. In this move, I probably said this 1,000 times. There has been so many people who continuously have tried to short this thing and lost a lot of money in doing so. This is not something where I think that like there's this arrogance that we all have that we believe we can call the top on gold. But gold's going to do what it wants. Could gold melt up to 5,000 an ounce in 2026? Sure. Who's saying it can't? Because remember, it's gold versus the US dollar. Fiat currency loses value over time. They print more of it every single day. Gold should go up. Now, it doesn't mean that it's going to go up in this trajectory forever. And I would issue caution. That's why I'm saying I don't think the risk to reward to buying up here is very good. Because if you buy up here, like I don't know, like let's think about this. If you're looking at this on the daily chart, where can I even put a stop loss? Down here? Like, what is that? $270 an ounce away. And I don't know where to target this because we're already in blue sky territories. We're in the all-time highs. So I don't have anything to do there. Now, if you want to get more constructive, if you're more of a shorter term trader, get down into the 4-hour chart, even here, maybe a pullback into this area. But I think I don't like to ignore the daily chart, which just looks incredibly overbought. So again, if you were to take this trade, like if you were to set up a trade on gold where you're like, I'm really bullish, you have support here, like you could potentially try and play gold like this. but these would not be trades for me. I'll tell you why in a second. But as like a technical basis, like if you were just a technical trader, which I am not a pure technical trader, but if I was and I was setting up this trade, I'd say, okay, we're in an uptrend. We have these ideas, and this all looks like fun and good, but this is not my strategy. Technically wise, like if you just pulled up my stream and you saw me marking this up, you're like, oh yeah, no, that makes sense. That's how Nick trades. But that's not how I trade. You have to incorporate the fundamentals to if you're trading my style. Right? Everybody has their own style. I'm not saying mine is the only way by any means. There's traders who have different styles all over the place. But for me, when I look at gold, the macro is not as attractive as it once was. So I think the risk reward is just not great. Right? So like, let me explain what I mean by that. Technically, gold looks incredible. To an extent, on the price action, it looks incredible. Seasonality does not actually favor a lot more upside for gold this year. Let's just take a look at that. So if I'm looking at gold, the trajectory for gold for remainder of year based on the 10-year average, seasonality is a real force. You can see how much we followed gold this year, or historical patterns for gold this year. It was very to the T. Other than this one little dip here, like for the most part, gold has followed trajectory of history right now. It's really interesting. But if we were to continue to follow trajectory, we would expect some consolidation or pullback in gold. So that's my thought process on that. What did Edgefinder indicators say before the big liquidity sweep, 10th of October? Curious. I'm not sure what you mean by, or I don't trade with liquidity sweeps ever, but I in terms of what the Edgefinder said on October 10th, for if you're asking about gold, we do have historical data on gold. Gold earlier this year was two different times. Two of my best trades this year in gold happened. So gold was bullish. Let's just fan this out. If you want to screenshot this, you can look at gold's reading all year long. Let me just pull this up. I'm just going to go back to like March. Okay, so gold was, if it's above 5, the Edgefinder deems it bullish. So gold has been not bearish one time. Not bearish one time. Thank goodness, because that would have just been a terrible signal pretty much for sure. So gold, in terms of the Edgefinder score history, was bullish in March. It was bullish in April. It paused in May. A little bit of bullishness in June. So there were some bullish signals there. We mostly chopped during this time. We didn't really go too far in either direction. But then we got our first like really decisive bullish trend starting in gold again early August. So we've been bullish in gold. Then that bullishness stopped end of September and has been a neutral reading since. So this feature is really cool because a lot of people like to kind of test the Edgefinder and how it would fit into their system. So the conclusion would be Edgefinder was giving bullish signals fundamentally and sentiment-wise between March and April into early May. It got another bullish round of data here in June and July, and then it got very bullish again in August. Those would be where you got confidence from the Edgefinder that the metrics that it follows generated bullish readings for gold during that time. Does that make sense? So what is maybe more important is that the Edgefinder has kept me, I have not taken one short position on gold in 2 years because Edgefinder has consistently had a bullish tilt. Why? Why is the score so bullish? It looks at institutional activity. I mean, we can look at it. Right now it's neutral, but we can still look at the principles that Edgefinder looks at a very high level really quick. Where is gold? Gold's getting a +4. So it's getting a neutral reading right now. It looks at, right, what the Edgefinder is doing when it's monitoring is technicals. So it's looking at seasonality. It's looking at the momentum of the market. It's looking at institutional activity. So the commitment of traders report, it's studying what's going on there. Sentiment bias, it's looking at crowd positioning and using a contrarian system there. It's looking at inflation data, how that could impact gold, jobs market data, and economic growth data. It looks at all of these things, and it's sort of like a in the sky little like, you know, bird's eye view system that's watching all this stuff. And then I use that as sort of a confluence tool with my own analysis of gold. That's how Edgefinder, like that's the purpose of the tool. And I know, yes, that is like totally a sales plug. Like it's a tool I think you should get. If that sounds something useful to you, having like, I think that like scanning this stuff manually is very labor intensive. Having a tool that just watches it all for you, that is the purpose of the tool. If you want to try it out, we mentioned it earlier, but you can scan the QR code. We'll change it on the screen here in just a second, and we'll drop a link if you guys want to try out Edgefinder. We do have a free demo version available on our website. It's a free limited version, and we also offer a 30-day paid trial. It's $199 to try it for 30 days and get the full access to the tool, see if it's right for you before making the full purchase. I would encourage, if you are thinking about it, now is a great time to try it out, to explore the tool and see if it's right for you, because let's just say November is around the corner, and that is typically when we do some cool offers. So stay tuned on that. Anyways, in terms of setups for me today, really it's just going to be staying with the NASDAQ trade that I'm in. I'm also long dollar Swiss. I think this is not going super well today. Let's take a look at, I think the dollar was down earlier. Yeah. So dollar index, a little bit down here today. I'm still long USD CHF. But I still think price action looks okay here. We've broken this downward structure. We're talking about hitting a very long-term level of support here. I think the dollar has more upside. Like I'll keep an eye on euro dollar, but I think likely the dollar has more room to squeeze higher. I've talked about that a lot in my recent videos. What's the difference compared to the economic top setups? Economic data is isolating only economic data, GDP, PMIs, retail sales, right? Top setups, sentiment is looking at only the commitment of traders report, retail positioning, put to call. Like if you want just one section of Edgefinder's scanning, you can do that with the top setups reading. The new AI market scanner, it is essentially the top setups page visualized in a easier to read format, specifically isolating one thing at a time. So like, again, if I want to talk about NASDAQ, I can go to top setups and I could like find NASDAQ, but like what this does is it shows a lot of stuff at once. It's great for like building a watch list for yourself. But if you actually want to take a closer look at NASDAQ or a closer look at gold or a closer look at a dollar cross, right? Having this isolated just gives you the data that is relevant to the chart that you've selected. So I can take a closer look at just what the Edgefinder has found for the asset that I care about. We do also have like data scanners that you can go in more detail. The reason I built this though is because this is also pretty cool. Like you can look at a lot of data here at once. But from my actual practical trading, I don't necessarily want to go through every single piece of data for GDP, for PMIs, every single time I'm looking for chart markups. I just want to see what the Edgefinder found about the jobs market, about economic data, etc. Like I know macro is important, but I don't necessarily need to pour through the data every single time I'm looking at a setup. Does that make sense? Nick, I'm long Kiwi CAD, dollar costing down, dollar cost averaging. NZD CAD, let's take a look at that one. NZD CAD, yeah, look at this pair. I actually really like trading this pair. I know it's pretty choppy, but that's why I like it. I like mean reverting currency pairs that tend to chop back and forth. So yeah, I don't hate it. What is the reading on NZD CAD? I'm just curious. NZD CAD +4 currently. Getting some good score in terms of comparison between the two currencies on inflation and economic data. I bet you this has a good score when we strip out technicals. So let's just look at that by going to top setups, Eco, and there's NZD CAD getting a pretty strong reading. Yeah, I like that trade, Bulent. Now, the reason stripping out technicals can be nice is that not everyone trades a trend following kind of momentum strategy. Some traders are more, sort of range traders or, kind of short-term counter trend traders, for example. Like if you're buying NZD CAD, obviously this isn't an uptrend, but there's traders of all walks of life. There's people who like to look for oversold conditions and trade the bounce, etc. So actually, when I trade currencies, I'm a little bit more counter trend than I am trend following. When I trade stocks or indices or commodities, I'm much more trend focused. But with currencies, there is no trend here. Like longer term, NZD CAD with very strong probabilities, no certainties because there's never such thing in markets. But if you ask me where's NZD CAD going to be in 5 years from now, obviously anything can happen, but my guess would be somewhere pretty close to where it trades right now, right? That's the difference between currencies. 5 years from now with gold, I'd say probably higher. No certainties, of course. You never know with certainty, but they tend, like commodities, because they're priced against fiat currency, which loses value over time, they tend to drift higher over the long stretch. But currencies, they're both losing value. So if they're both losing value, they kind of just chop against each other, especially currencies that have similar type economies. For example, Australian dollar versus New Zealand dollar. These two currencies, sure, you've had a big push recently, but like zoom out, this thing just goes sideways. If you can stomach the huge moves against you, and again, I would issue a lot of caution there because what most traders do with currencies is they use a lot of leverage. But if you're using like minimal leverage and you just say, hey, when this thing gets to upper extremes, like multi-year extremes, I'm going to trade it the other way. That has, like, let me just pull up the monthly. If you can survive like the nasty moves by sizing down so small, it essentially is a very, very high win rate strategy. US oil looks like a time to buy. Let's take a look at US oil just to see, and then we got to throw the stream over to Forex James. He's joined, he's ready. So oil's going to be our last one here today. Real quick, before I mentioned it a second ago, if you want to try out the Edge Finder 30-day trial down below, scan that QR code or click the link in the chat. If you want to check out the Edge Finder, if you are thinking about getting a copy, now is a great time to try it. That's all I'm going to say. Explore it, take it seriously, especially if you have some time in the next few days or next week or two. Explore the Edge Finder, see if it's right for you, because we do have some special offers coming. More on that later. When it comes to oil, if I pull up oil here on the chart or on the scanner, oil is getting a bullish reading, but where I like to trade, oil and commodities like with a trend following approach, technicals being bearish is probably going to keep me away from the trade for now. But I see the vision for longer term. I see upside for oil because economic growth looks promising relative to expectations. I mean, GDP numbers were really strong. Manufacturing PMIs looked good compared to expectations. Retail sales numbers beat expectations. Services PMIs missed. Inflation data looks like we're going to get some rate cuts, which is stimulative to economic growth, which is good for oil demand. There's some other forces at play right now. The supply side of oil, I know, is a big drama point. Like there's a ton of oil supply in the world right now, and that's kind of muting the price. But if you were to see some sort of sign of life, specifically breakouts, higher lows, etc., I would probably also be a buyer of oil. Now, if you're like sitting back and you're like, I want to buy energy stocks for the long term, or you want to buy just, US oil futures contracts or something for the longer term, I mean, you do you. I actually think there might be some longer term upside in oil prices, but from a trading perspective, I'd just rather wait for I'd rather wait for some momentum. Like I'd rather, if you showed me this chart and it was doing this, I'm probably buying oil. But because we're sitting at the lows and every rally seems to get faded, like when I got long over here, I got long, saw the breakout, took a small loss and got out of there because it failed completely at resistance. I thought we might be breaking through, and we did for a little bit, and then we failed out. So I got out of that. I took a loss on oil that time. So I'm going to wait again for another attempt. Something like that. Again, I'm probably bullish on oil. As long as the macro and you know our screener here still looks good. So there you go. Anyways, guys, we're going to pass over the stream. I went over by a couple minutes here to Forex James taking over, talking a little bit more about the markets, what's going on, some trade setups that he's looking out for. So don't go anywhere. He's going to be taking over the stream and sharing some of his ideas just after this quick break. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. How's everyone doing? Hope you're well. Figured something out this morning, or yesterday actually. Turns out for the past 6-7 months that I've been doing these segments on the stream, my mic's been really blown out. So hopefully after about 7 months of dealing with my terrible audio, it sounds a bit better now. Surprised no one said anything. Anyway, happy Wednesday. Hope you're all well. So my positions haven't changed. I'm still in the S&P, which is moving really nicely. So I was essentially just buying the dips on the S&P. I bought Monday morning this week, and I bought again yesterday when we came down back into the support level. Both are moving completely fine. About 160 ticks in profit there. Pound Swiss continues to just play sideways. There is nothing going on here. As I've said previously, it's one of those trades where I'm getting paid swaps. And to be honest, I've been holding it that long. And because the S&P interest rate is at 0%, the swaps I'm getting paid are actually pretty healthy, pretty nice. So my risk on this trade has actually been minimized significantly. I'm still in the pound yen shorts. Again, not really done anything here. Got a really nice entry just on the wick right here yesterday. We got filled. But yeah, there's nothing interesting going on with pound yen at this time. Just really wait and see if we can break lower and establish a downtrend on this H4. And I'm building into a little bit of a position on New Zealand US dollar in a minor drawdown now, but it's more of a DCA approach rather than a swing trade, or a typical swing trade anyway. So yeah, again, not much really to say on that. I agree with what Nick said about the dollar having some more upside potential. It seems like tariffs have pretty much gone out the window for now anyway. I mean, we had the news thing come in yesterday. It was cooking oil. I got a notification from Bloomberg saying SP500 drops as Trump puts tariffs on cooking oil or whatever it was. I just sat there with my girlfriend. And I was like, I just don't know how long I can do this job for. It's like, how long do we have to deal with these ridiculous headlines for? Cooking oil. And the S&P did move off that. Bearing in mind, that's not a big deal. That's got no reason really to move the S&P. And that was this H4 candle here. And I was like, I was just in a bit of disbelief. I was like, what is the world coming to? Anyway, dollar Swiss. Again, I heard Nick talking about this one. I also spoke about dollar Swiss yesterday on my segment there. I do really like the idea of being a buyer. So we do have a bullish reading of 7 on dollar Swiss, which obviously is making me or putting me in a bullish bias. We've got a bullish trend here. Price has created a double bottom on these previous highs. We're in the fib level. Technically, it looks quite good. I'm just not really a huge fan of the way that this H4 candle is looking at the moment. So I want to wait until this closes, or if it can flip back bullish again, and just show me a bit more confirmation that buyers are in the market right now. Then I can jump in. But for now, just waiting. Not much difference. Okay, well, I'll take that as a good thing. What do I think of pound dollar? Slugmeister, I'm good, thank you. How are you? Gold's ripping again today. Nick, where will be a signal for sell gold? You might be waiting a while on a gold short signal, my friend. What was it? Pound dollar. I don't really think I've got much on pound dollar. I think it will stay pressured to the downside. As I just said, I think the dollar does have potential for further upside. I think the UK has got some pretty big problems going on, and I don't really see any way out of it, to be perfectly frank. I think if anything, they're going to get worse. So I mean, there is actually probably could have been a seller at this point here on this sort of retest into the 50 moving average. But yeah, I think overall pound dollar is likely to come down to around what level is this? Towards 1.32, I think would be the next target. However, saying that, I think we could potentially have a little bit more upside here just into these moving averages and just sort of fulfill a bit more of a meaningful pullback and then come down towards 1.32. I think that's a reasonable idea. Although it's not something I'm wanting to trade right now. Gold's ripping again. Let's have a look. It's not having I wouldn't say it's a rip, but it's definitely doing very, very well. I mean, it's been doing well for a long time. It's not really a surprise anyway. It'd be more of a surprise if gold wasn't having a good day. New Zealand US dollar. Yeah, I'm short New Zealand US dollar. I think the New Zealand economy is pretty weak. The RBNZ's not hawkish. So I think overall it's a pretty solid trade idea. But I'm not really comfortable setting a hard entry, hard stop loss, and hard take profit on this one. So I'm happy to just build in some short positions in a DCA approach. So if we can come up here, I'll add a short in there. If we can come up to these next highs, I'll add another short in. And then if we end up coming higher, I'll probably cut the position. But the idea is just to bring up an average price and then see the dollar continue some strength. Shorted pound dollar 10 minutes ago. Very nice. I hope it works out for you. Thoughts on dollar Swiss? Yeah, we just looked at dollar Swiss actually. I think I think it makes sense to be a buyer. So let's use the AI scanner. Actually, we'll get a bit more of an insight. Pretty nice score of 7. Dollar Swiss presents a cautiously bullish outlook, primarily driven by supportive economic fundamentals. Technical positive seasonality and clear upward trend contribute to the asset's favorable technical score. Retail sentiment shows a contrarian bearish extreme, suggesting potential for limited upside. COT is neutral. I don't think we've got COT anyway due to the government shutdown, so that doesn't tell us too much. But yeah, as I already said, I'd really want to just see what happens with this H4 candle. So although I don't typically like to overanalyze candle formations and things, but if I trade a fib and price is still on a very aggressive H4 candle, I'm not going to buy into it. I would rather wait to see buyers taking control, have a little bit of a bullish push to the upside, and then I can execute. It's one of those things. Yeah, I sacrifice a pinpoint entry, but I also minimize the risk on trades. I shorted New Zealand dollar, a few positions and 1 entry on your strategy. Very nice. The issue with the Swiss is the risk with France. Yeah, no, France is going through it right now with their politics, but what can you do? Your views on Euro Aussie? I don't know, to be honest. I've not really paid any attention to Euro Aussie as of recently. I mean, it's a bullish trend technically, although it doesn't look very good, to be quite honest with you. It just looks very, very sideways. So we've not really done anything within this zone. So if you're intraday trading or scalping, completely fine. But if you're a swing trader and you're expecting, a larger move, I'm not 100% sure you're going to get that soon. Obviously, it will come eventually, I'm sure, but yeah, it just looks a bit flat. Seems like there's not too much going on there. But let's just see what's going on here. So we've got a score of 3 on the Edge Finder, which is neutral. So yeah, sideways market in my opinion. No meaningful reading on the Edge Finder. It just leads me to sit flat. Waiting for some little momentum to downside. On what, millionaire? Thoughts on Bitcoin? That's a good question. It seems stuck. I think yesterday I was saying that it looks like it might go lower just because of this pullback here, failure to break higher. So to be perfectly honest, and this is coming from someone who doesn't trade crypto, so please take it with a grain of salt because it's not my area of expertise in any way. But I would be looking for 2 situations here: either a break lower, retest, and then look to sell here, or a pullback into these moving averages, sell, and then look for, again, this break and retest lower. But yeah, that's all I've got for you, unfortunately. I also like New Zealand US dollar short, but I'm waiting for, oh, right. Okay. So you're waiting for the downside New Zealand dollar. Makes sense. Dollar yen and euro dollar. So dollar yen, I would stay away from, in my personal opinion, just because I think we've got a couple of different things going on with dollar yen. We've got potential dollar strength, which is obviously an upside. We've also got the idea that the outlook now for Japan is not really as strong as it was with the path to normalization and all those things with the new PM that they've got. She's pretty much a dovish PM or a bearish PM for the yen, generally speaking. So that's bullish for dollar yen. But, and the big but, is 150 to 155 is kind of like a very high risk of intervention by the Ministry of Finance. So regardless of the bullish factors for dollar yen, I think even if we don't get the intervention, I think the fear of the intervention is keeping the serious buyers out of the market right now. So, you know, even if dollar yen, let's say, pulls back like this, we get long and it's something like this, perfect. But at any time here, we could get that intervention and get completely wiped out. And I don't think that bulls are really interested in trying to manage or deal with that right now. I think there's other things to be involved with. So yes, I think dollar yen fundamentally bullish, but I think the risk of intervention and tariff things going on with the US, it's a bit of a risky one in my opinion. Euro dollar, I think, does have more room to the downside. I'm actually looking to get short euro dollar again. If we can pull up just slightly higher towards this 100 moving average on the H4, I'll likely enter in again short to my my sort of medium term take profit down here towards 1.146. I don't really think there's anything else to discuss on euro dollar. I think, as we mentioned briefly, France is having some major problems. I don't think Germany's economics are really that supportive right now. Again, I do think dollar has some further upside to come. So yeah, I'm quite happy to be a seller of euro dollar. And again, it's a negative swap position. So we will get paid to hold shorts, which is nice. Pound Swiss. So pound Swiss, from an interest rates trader's perspective, I don't really want to sell because it doesn't make much sense for me to be a bear on this market. However, I mean, it's very difficult to trade pound Swiss, in my opinion. Very difficult to trade pound Swiss for me because the trend is bearish. I'm a trend follower, but on the fundamental side, I'm an interest rates trader. I'm always looking for divergences and yield gaps. That's why I'm long, because there is a nice yield gap on pound Swiss and buyers are getting paid. So it makes sense to go for a carry trade long, just like kind of what we saw with dollar yen in history. But again, from that trend following perspective, this is very, very difficult to try and be involved with because I am counter trend trading and I am attempting to buy a multi-year low. which, is a recipe for disaster, generally speaking. However, as I said at the start of the stream, because the swaps are so strong or so high on this asset, my risk on the position has actually been reduced quite significantly. So that's why I'm happy to hold it through drawdown, is because even if I do hit stops, it won't be a full stop out, because again, those swaps have created a buffer. You have the same short idea, James. Love that euro dollar. Yeah, I think what we've got to make sure is that we're just not getting overexposed to the dollar, because I'm already in New Zealand dollar. I also want to get long on the dollar Swiss. I'd like to sell euro dollar again. So it's just a case of being cautious, because the dollar is still in a bit of a danger zone, really, where bears could step in. I still think that if we are going to see this dollar continue downtrend, we're either going to see it right now, or we're going to see a pull back into this zone, and then bears are going to take control. That's obviously the bearish case. Bullish case, we can start breaking higher, obviously. But I am just a bit cautious of this level still. So I'm just taking it easy, taking it slow for now. And of course, we still don't have US data, so that makes it even more difficult. Aussie, New Zealand. Yeah, let's take a look at Aussie, New Zealand. So I mentioned this, I think it was maybe last week or the week before. So I've been bullish on Aussie, New Zealand on a fundamental side for quite a while. The problem is, I actually would more want to be a seller of this market, looking for a mean reversion. I think Nick spoke about this as well just before I came on, about the mean reverting currencies or mean reverting pairs. The Aussie New Zealand is a perfect example of what he was talking about there. And this is a great market for DCA traders. So essentially you fade the moves and layer in positions, bring in up or down an average price, and looking for it to re-enter the range or get to the high or low of the range. And that's basically the idea here. So I'm not actually in any positions, but I wouldn't be opposed to actually selling here, expecting that this sideways trend just continues, because that's the most sensible view, in my opinion. Because if you're expecting this market to break higher, which, absolutely could, but we haven't really sustained any movement outside of this range since 2014, roughly. So what are you going to bet against? How long? 12, 13 year market behavior or the fundamentals? It's tricky, but again, I would, in this case, actually go against the fundamentals and be a seller, which, is a bit contrarian to what I would normally do, but it's just very specific to this market. Nat gas. Last time I checked Nat gas, it was having a bit of a bad time, but I've not checked it since. Yeah, see, I don't know. Again, I would still like to be a buyer, but I've just not really seen anything that would really warrant me being a buyer just yet. Can you touch on US data Friday with a focus on NFP? No. Because first of all, we don't have NFP on Friday, because NFP comes first Friday of every month, and also we have the government shutdown, so we're not really getting much from the US. Sure. Thank you for Aussie New Zealand analysis. I'm short on Aussie US dollar at the moment. Interesting. Okay. Yeah. I mean, as I said, I still like the idea of being long dollar, short on the other major currencies, but it's just that risk of getting overexposed, because what could happen, and the reason that I am being so cautious, is because the dollar could just remain sideways for a little while until we get a government opening. And bearing in mind, we've already had we've had a very poor labor market, really, especially this year. The data has not been supportive whatsoever. We've had a very poor ADP, and that's all we've had, really. So it wouldn't be a shock to me if we do get when the government reopens and we get this labor market data, it could be dismal. Because don't forget, it's not just a general NFP thing. We've also got to factor in the idea that people have been sort of unpaid during this period. So it's not out of this world to assume that we might actually get worse labor data as well due to that. So that's something to factor in. So yeah, that's another point there. Lupu, I've got no idea how to say your name. Hi, back to you though. You're entering pound Swiss longs at 0.5% risk. Fair enough. Morgan Stanley's still in their long position, which is that's a redeeming factor. My S&P position's moving quite nicely. It seems the indice equity markets have pulled back beautifully. So that's always nice to see. I was a bit annoyed on Friday. My stock portfolio was doing really well. And then, we had the tariff news and I just saw loss. Not loss as in realized loss, obviously P&L losing. And now it's back to almost all-time highs in terms of P&L curve, which is amazing. When will US government shutdown be over? I can't tell you that right now. I'd need to get my crystal ball and sit down, light some candles, and do a little seance and try and figure it out. But on a serious note, I've got no idea. So the last government shutdown was in 2018, and it lasted 35 days, if I recall correctly. And guess who was in office for that? Well, it was Trump, and we all know what Trump's like. Whether you like him or don't like him, that's not the point. We know what his behavior is. He's very businesslike, negotiating, so on and so on. So it's really not a surprise if he ends up taking a little while trying to get what he wants out of this. So it could last. It could end tomorrow. It could last for another 2-3 weeks. Who knows? Call me chilly. Okay. Right. So dollar CAD is another one. I've been looking to be a buyer of dollar CAD. I've actually hold on. Let me just quickly check the schedule. I've got about 4 minutes left, and then you've got Marco coming on to take over. So I'll just go through dollar CAD quickly. So dollar CAD is the most bullish reading on the Edge Finder with a score of 10, which is fantastic. Dollar CAD exhibits cautiously bullish net edge, primarily driven by supportive economic factors. Technical score reflects positive seasonality and clear uptrend, indicating potential for continued strength. So with that in mind, again, it's difficult because I'm really wanting to be involved with the dollar, but I have to just restrict myself to a certain extent. And even if we did want to buy, the question then is, how do we get in? Because it's now got a very similar problem that gold has in terms of it's just sort of moving up with pretty much no pullback. So I'd need to see a move likely back down to this low, touch into the 100 moving average, maybe a 200 moving average at this low, and then I could start picking up some dollar CAD. But right now, it's just a bit too expensive for me to justify being a buyer. What does the US government shutdown mean in simple terms? It's basically like a coffee shop closing down. So you're not going to get your coffee. You're not going to get your croissant. You're not going to get your muffin. But you can still look at it from the outside. But the lights are off. The employees are at home, not getting paid, while the boss is trying to figure out what to do. Pretty much that, again, simple terms, but I suppose that's the quickest analogy I could think of. What's your take on pound CAD? Let me see. I know pound CAD was on the Edge Finder as a very bullish reading at one point. I'm not sure if it still is. You know what they should add? They should add voice detection on the Edge Finder. So when I say pound CAD, it should pop up. That would be good. So I don't have to go through clicking because I'm lazy. Pound CAD exhibits, it's a score of 6. So yes, I am leaning towards being a buyer. Pound CAD exhibits a cautiously bullish bias, primarily driven by supportive economic fundamentals. Okay, so we know that the Canadian economy has been rough anyway. I mean, it's been that way for a little while now. So the problem still arises: how bullish are you on the sterling or the UK? In my case, not at all. So pound CAD, in my opinion, now comes down to trading two poor currencies. When I say poor, I don't mean economically poor. I just mean poor as in just bad. I don't like either of them, and I wouldn't want to hold either of them. And on the H4, we've got the sort of a similar issue we saw with I can't remember what else were we looking at that was like this. Anyway, just sideways. There's not really much going on. There is a slight bullish trend here. However, even if you are buying here, you've still got this sort of triple top that price is coming into where, you know, a bit of a danger zone. So again, I would be taking care if you're in pound or wanting to trade pound CAD. Technically, it's very ugly. Fundamentally, it's bullish, but I don't really like either, so I'm going to stay away. Who's running the show if the coffee shop is closed? Well, Trump is still there. The boss is still around. You know, it's not like he's just sat watching Desperate Housewives in his gold penthouse or something, but it's just you can't get your coffee. Anyway, guys, I'm going to head off. We do have Marco coming to take over the show now, so I'll see you tomorrow, probably. Have a good one. Stay safe. Don't get margin called, and enjoy the rest of your day.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello, everyone. Welcome to my segment of the live stream. So I do hope everyone is doing well. If you have any questions for me, you can put them in the chat. I'm actively watching it. So what has been happening in the markets? Well, I already had 2 live streams this week, Monday and Tuesday, where I gave a general kind of view on the markets. From that point, I actually sold GBP USD, and I have a buy limit set for USD JPY. Okay, so let me just quickly see. So this is a new feature from the Edge Finder AI Market Scanner, and I'm just seeing what it says about UJ right now. Looks like it's a kind of a neutral reading, and yeah, but a very interesting view. So if you want to check it out, this is included for all Edge Finder users. Let me tell you about my positions first, because I think that's going to be the most interesting. So again, both positions have been a signal in the A1 Discord. So if you want to join, you can use my discount code, which is MARKO. First position is, why do I have an alert set here? I don't know why. Let's remove that. So first position right here is a breakout out of a channel. So I really don't like the pound. I think the pound is economically very weak. So the numbers coming out of the UK are very bad. You can see that in both the short-term data and the long-term data. So UK, yeah, pretty much very bad data. But for the US, we're doing pretty well. So the US is doing pretty good. It's pretty healthy. Okay. Short term is okay. Long term is, I would say, better. I just want to mention, some people say the NFP is looking pretty bad. While it is on a downtrend, if you look at the data of NFP before COVID, you can see that these kind of levels around 50K per month, 70K per month have been the norm. So these crazy numbers of 200, 300, 250, 250, 230, it's not normal NFP data. So even though we are in a downtrend, I think we're still getting some healthy NFP data. It is all positive, as you can see. So I'm not really afraid of the US economy. I think it's doing okay. So that is good for the dollar. What I also think for the DXY is I think we have more upside. So I think there was a lot of people who were very, very short in Q1 and Q2. Now I think the story has changed. We have started to bottom out. I think we can finally start to impulse to the upside. Now, let me tell you one thing that maybe most traders are not considering. What do we know about the US stock market? Well, we know that the US stock market loves October, November, and December. How do we know that? Very easy. Seasonality index, S&P. So pretty much November and December, okay, October not so much, but November and December are great months. There's a lot of business activity. There's Black Friday, the best day to sell something. There's a lot of revenue being collected. There's a lot of catching up that US funds have to do, or that hedge funds have to do. So if you were a hedge fund manager in 2025, you were probably selling off right here. Okay, you were probably selling your assets because you need to manage risk. But then you saw a massive explosion. So a lot of hedge fund managers could be trying to get into the markets and just pushing the price higher. Okay, so we know there's going to be buying in November and December. We know that big hedge funds need to get into positions. Now, what do you need to buy US stocks? You need US dollars. And for that reason, I think the DXY is more bullish than bearish. Also, if you look at the seasonality of, for example, USD yen, you would see pretty much the same thing as on the S&P. Okay. So let's just wait for this to load. In seasonality, you will see that, yeah, basically October and November are pretty good bullish months. See, this is the average. This is the 10-year average. You can see during October and November, it is just a shot to the upside. So that is why I'm looking to buy UJ. For GBPUSD, I got in around 1.332. Stop loss is around 1.34. And the target is probably going to be around this area. This area of support could be problematic. So that's kind of what I'm aiming for. I will consider a trailing stop loss. But for now, let's aim for this support level. So that's the general trade. The stop loss is kind of above the 20 MA once we start to go lower, if we do go lower. Also, we have this clear area of resistance. So support becomes resistance as we go down. I'm expecting this level to hold. If it doesn't, I'll get stopped out. It's a controlled risk position. But if you have been following my streams, you would know that I was closely watching this flat range and I was looking for breakouts lower to actually sell this market. So that's the game plan. That's the trade execution. Okay. UJ. Yellow flag is on there, which means I'm looking for a trade. I'm not yet in a trade. So for UJ, there's a couple of reasons why I want to buy it. But the biggest one is I'm bullish on the US dollar. US has good data, healthy data relative to other economies, and the seasonality is really good. So seasonality is really good, but the main thing is the taco trade. So taco trade, Trump trade, what is that? It's a trading edge, and a trading edge is a piece of information that you know that, let's say, 95% of other people don't know. So the taco trade is when Trump goes out, has a crazy tweet, crazy announcement, and then you execute a position that goes against his tweet, against his announcement, and you get a nice discount. The thinking behind it is soon after the crazy tweet, Trump is going to go back on his word and he's going to say, that I was just kidding. I was not serious. And basically the markets go back to the initial levels before the sell-off. What would the taco trade look like on the NASDAQ. You could have bought the dip. You would expect the price to go back to the initial level. On UJ, you could have bought the dip. I'm trying to buy the dip, and the expectation is that we will go back to here. Or on the Aussie dollar, again, the Aussie is highly connected with China. So this tariff news hurt the Aussie on Friday. The bet is to catch the dip, buy the dip, and then maybe take profits at this level. Okay, that is called the taco trade, Trump always chickens out, or the Trump trade. It doesn't always work. It doesn't always play out, but it has a pretty good hit rate. So let's quickly jump onto the calendar. Let's see what is happening. So the US news is still nowhere on the chart. US government is still shut down. Until it reopens, we won't get any dollar news. Am I concerned? So I think I saw a comment saying, aren't you concerned buying or selling GBP USD, buying USD JPY because there's no recent US dollar data? Well, I believe in trends, and the current trends of data in the US are doing okay. So GDP is doing pretty well. We have the unemployment rate, which is staying pretty flat, staying pretty healthy. NFP is falling, but it's still at very, very healthy levels. Okay. Inflation, CPI, kind of above target. That's a problem. But I would say overall, I like the US long story. So yeah. UJ, I also wanted to mention there was an unexpected winner in Japan, unexpected prime minister. I think it was Takaishi in the end. And she's supposed to be dovish. That's a big shock to the markets. That was really unexpected because the current stance of the Bank of Japan is a hawkish stance. So you have Bank of Japan, which is hawkish, but now the prime minister is dovish. So will they actually hike interest rates? That is not certain. There is uncertainty. And with that uncertainty, you can clearly see the yen lost quite a lot of value. Okay, so the yen lost quite a lot of value. I wanted to check the calendar. So Aussie, we have employment data on the Aussie, which is going to be interesting. We have GBP data tomorrow, GDP for the GBP. That's going to be good as well. I mean, it's going to be interesting. It could be important for my position, so we will see what will happen. But with the trend in the UK, I'm just seeing a downtrend. So, I mean, everything looks pretty bad in the UK. Let me tell you, I showed you the short-term data. Here is the long-term. So GDP all over the place. Unemployment rate is climbing higher, if I'm not mistaken. Yeah, definitely climbing higher. Looks pretty crazy. Inflation, GBP. Yeah, inflation staying problematic, I would say. So 3.8%, it's quite a lot. Relative to other economies, this is one of the worst inflations. The target is way, way below. So that's a problem. UK economy not doing well. Okay, so let me check the comments. Hey Slugmeister, hey Ballout. Taco Marco is here. That is true. Another day, another FOMO from gold. I know. Gold is absolutely exploding. But if you're a good trader, you're going to look at this market and you're going to say, I'm glad to be staying out. I'm glad not to be chasing the price. Maybe a year ago, 2 years ago, I would be the one buying the top. And trust me, when the dip comes, when the pullback comes, and it will come, it always comes, you're going to get a big discount. So even though now the price seems to be exploding and like it's never going to come back, when you do eventually get that big pullback, it will be a pretty big discount. I'm talking maybe 10%, maybe 15%. It should be a big one. And at that point is when you can grab a cheap price of gold. Okay. So now only the suckers are buying now. So it's the same with Bitcoin. This is like 2018, 2021 with Bitcoin. Only the absolute, I'm sorry to say, but the absolute suckers are getting in here at the top. And unfortunately, a lot of losing traders are selling this thing. So they're thinking, it's gonna go down here. This is the top. And then they blow their account. So right now, if you're a good trader, I would say you're not touching gold unless you have a crazy trading edge where you have close to absolute certainty of what is going to happen. Then, well, of course, you can get in. But I would say for 99% of traders, staying out of gold, staying out of silver, that's the exact thing you're going to hear from Nick, exact thing you're going to hear from Chris. I think James has the same stance. So that's what all the professional traders are saying. Just stay out of it, because the chance to screw it up is much higher than the chance that you'll actually make money. This is a pretty erratic market. Okay. As much as the GBP data looks bad, but is it wise to short GBP USD as the USD is not updated? So yeah, I saw that question, and I would say it's not really a big problem. That's a clean double low right there on GU. That is true. So GU has a nice double bottom here. I'm looking to take profits at that level. We will see what will happen. I do want to take this chance to talk about the sponsor of today's video, which is DNA Funded. So here is my 50K account, and I just got taken out of a trade. So I just got taken out of a trade for a winner. It was on the S&P. I can even show it to you because I paint all of the trades on TradingView. This is for, this was the trade. This is for testing ChatGPT. So I'm testing ChatGPT trade signals, and I'm doing that through a funded challenge. So pretty nice trade. So we can close this. Current equity is around 49K. So in a bit of a drawdown. This is the equity curve, by the way. I have a euro-dollar buy position running. It's in some pretty nice profits. So we will see what will happen. Very interested to see how the challenge will turn out. So far, we're around break even, if I'm not mistaken. Yeah, somewhere around break even. Anyways, if you're looking to get a funded challenge, DNA Funded is a great choice. It's a reliable prop firm. It's being ran by professionals, so it's not like an 18-year-old kid running it in the background. And you get a very competitive price with our discount code, which is A1 Live. Okay, so this code is specifically for you guys watching the streams. 25% off all of the challenges. That's quite a big discount. And if you compare all of the reliable prop firms, you can get the cheapest price with our discount on DNA. So check it out and consider taking a funded challenge, expanding your trading capital. Yeah, this is the current equity, 49.890. So just around break even. Getting back to the markets. Marco has really been focusing on taco. Low-key seems like he just likes the word. I do like the word. And I'm placing bets on just the word taco, but it's a definite trading edge. So I think Nick has bought the Nasdaq during the dip because of the taco setup, and he's doing pretty well currently. Okay, I'm not sure of his exact entry, but the bet is that the price will go back to the initial level. It's very close to the initial level. So I love this sort of a trading edge. Just Trump, you can make a lot of money if you follow Trump, like if you know how to react with Trump. So if it wasn't for Trump, we would never get a 21% discount in the S&P. I was buying like crazy all the way to the bottom. Nick was doing that as well. So if you know how to interpret what Trump is saying, yes, the regular guy will get crushed because they will sell everything right at the bottom. That's the game. It's a dirty game. But us professional traders, we know to buy like crazy, especially when everyone is bearish. Okay, that's one example. Now, second example is the taco trade, where basically Trump said, he was going to put tariffs on Friday, and then on Sunday he decided against it, and he said that China is a great friend, we're going to solve everything, and now no one is really sure if the tariffs will be implemented or not. So interesting stuff. Let me see. What else do we have? Is President Trump eligible to run for presidency again? I'm not sure, because he already had one term. This is his second term. But in between that, you had Biden. So I'm not sure how that works. I'm interested in that as well. Might be good to ask ChatGPT. I don't agree with Marco. Day traders are longing gold every morning, making massive money with stops, of course. Yeah, if you're a day trader and you know what you're doing, you have a good trading edge, you can just buy gold and get out quickly. But as I said, 99% of people will lose money in this environment. Okay? That 1% that knows what they're doing, that has 5 years of 10 years or 10 years of experience, they will make money in this environment. The retail will get crushed, because they may make some money, and then this will happen, and all of their gains will be erased. So yes, there are some traders who will exploit from the massive uptrend, but there's just such a small number of those traders that it's best. My best advice is to just avoid gold right now. Okay, I'm looking to buy it. I do want to buy it, but I want to get a discount. I want to get a pullback, and then I'll be in. Same with the Nasdaq. I mean, we had a pullback. I was too slow for the taco trade, so I did not buy the dip. But I want a bigger pullback, if I'm being honest. So yeah, possibly a bigger pullback. And also my EuroCAD position is just above around break even. If anyone is wondering, this was also a signal in the A1 Discord. Basically, as far as currencies goes, sell the CAD, sell the GBP, and there's a high chance you will make money in 2025. Let's see. Only suckers are buying and only losers are selling. Well, yeah, that's what I kind of wanted to say. And there's that small percentage of traders who is making money day trading. And Ballout is offended by the comments. This sucker is up $16 on 2 contracts. Or is that a joke? I'm guessing that's a joke. Hello, Marco. Did you say euro dollar buy on a prop firm? I thought you are bullish on US dollar. Yeah, but that's just ChatGPT trade signals. So that's a different account. That's a different sort of series I'm doing. I'm testing ChatGPT trade signals. So I have zero input in that challenge. Okay, it's just what ChatGPT tells me to buy or sell. Has anyone tried instant funding at DNA Funded? I haven't. I personally think you get much better conditions with a 2-step challenge. So we can take a look. Let's go to the conditions. So I think you get the best conditions and the best price with 2-phase, any sort of the account size, because you get a static drawdown, while with instant funding, I'm pretty sure you get, trailing the drawdown. That makes things very tough. And your max total loss is 4%. So yeah, I just think if you're a good trader, you'll have more success with 2-phase. You get better conditions. Cedric has accidentally opened a long on gold. Well, yeah, now you can't close it. You have to keep it in the markets. Trump makes up his own rules if he will run. Yeah, maybe. How's your ChatGPT trades going in prop? Break even. Okay, so the result is break even. This is it. It's a 50K account, and the current equity is 49.911. So it's just about break even. This is the equity curve. So had some drawdown, went into profit, had some drawdown, and now we're back to break even. But long term, it's up, I think, plus 23% in 120 days, which is pretty nice. Okay. Last year, I got screwed trying to short gold. This year, I made so much just buying it. Yeah. So with these assets, your edge is automatically in your favor if you buy. But that doesn't mean buy the crazy highs. That doesn't mean getting in at these highs. That means maybe getting in at the start of the trend, or maybe during the consolidation, or maybe somewhere here during the pullbacks. Okay. This was an okay pullback. So if we get something like this, I would say it's maybe okay to take an initial buy position. This was definitely a good pullback. Let's see. Minus 11%, that's pretty healthy. So if we can get this pullback again, and we will get it eventually, I'll be in. So that's what I'm looking for. With these assets, your edge, as I mentioned, is automatically in your favor. So if you do want to get into a position, this is not financial advice, but if you do want to get into a position, if you cannot resist, it's better to buy than to sell the NASDAQ, gold, silver. You just have a much better chance of making money if you just buy. What if the drop doesn't come? Like Powell said, cuts are coming, so dollar may weaken. No, so the drop is gonna come. It always comes. Nothing lasts forever. So we're all gonna die one day. And that's the same with trends. They all start, they all have these erratic times, and then they all die down. Just the way the markets work. Okay. So don't think that there is never gonna be a pullback, that we're gonna just go up in the next 30 years. It's not gonna happen. Pullbacks will happen. In all of the crazy bubbles, the dot-com bubble, the bubble before 2008, the bubble in Bitcoin, they all come to an end, okay? And they all have massive pullbacks along the way as well, which is nice to know. Okay. Wasn't CAD data good? Exited my Aussie CAD buy. I was a little skeptical of it going further. I do think some recent data from the CAD was positive, so it should be in the Edge Finder. So we can take a look at Canada. Let's see. Yeah, so on the 10th of October, we had unemployment and employment change, which came in better than expected, a lot better than expected. So the unemployment rate dropped a bit. Employment change was completely opposite than the previous number. That is correct. But what I'm focusing on, still, most recent data is super bearish. Long-term data is the main problem. So look at the GDP all over the place. Look at the unemployment rate. Very high, 7.1%. Relative to other countries, that is massive. That is crazy. Look at the inflation for the CAD. Around 2%, not a lot of room to cut the interest rates. So that all is telling me Canada is a pretty weak economy. If you also pay attention to housing prices in Canada, and housing is a big part of Canada's economy. Housing prices are going down. They're steadily going down. They have been going down in the last, I think, 3 to 4 years. So that's another telltale sign that the economy is not doing well. The less demand there is for housing, the less demand there will be for the CAD. And the price goes down. Okay. So let me see. If I may, what are your instructions questions in ChatGPT to get your signals? So very simple stuff. I just tell ChatGPT to look at technicals, fundamentals, seasonality, and sentiment. Give me one trade on the S&P and one trade on a major currency pair. That's about it. If you want the full story, you can check out my YouTube channel. I have a full series on that topic. I already have 2 videos. So just search up Marcos trading journey And on my channel, it will be very easy to find ChatGPT trading challenge. Okay. And all of the details are in there. So we're approaching the end. Let me see if anyone is after me. This is a great website, by the way. A1 Trading live stream schedule. If you want to see when I will be streaming or when Nick is streaming, this is it. Okay. So no one is after me. Cool. I wanted to run through the watch list. The NASDAQ. I'm looking for buy setups, but I would prefer to see a bigger pullback. Gold, I'm looking to buy it. I want to see a pullback. Silver, same thing. Just looking very erratic. One thing I mentioned yesterday is usually when there is a bubble, when there is a massive explosion in price, once that news hits the general population, once you see that news on the television or on the evening news, that means the bubble is probably going to burst. So it was the same with Bitcoin. Usually when my grandma says, hey, Marco, have you seen Bitcoin? It's exploding massively. Is it a good time to buy? That's the best time to sell. Yeah, last week I was watching the television, and I wasn't watching the television because who watches the television anymore? I was just doing something on the TV, and I noticed on the evening news that they talked about gold. Okay, so probably we're near the end of the explosion. It's probably a better time to I'm not going to say sell, but if you're a long-term investor, I don't think it's a very wise thing to buy right here. So we may finally get a pullback. That's just from the indicator where now everyone knows about gold. Everyone has heard that gold went from 3,000 to 4,000 this year. And pretty much everyone has made a decision. Do they want to buy, stay out, or potentially sell? But I think since there's not going to be a lot of buyers left, the sellers will start to take profits. Okay, the sellers will start to take profits. That is just my general forecast. UJ, I have my level set. I have a buy limit. I want to buy this thing. It's betting on the taco trade. I like the US dollar. I think the yen could face some weakness with the new prime minister and the clash between Bank of Japan and the new prime minister. GBPUSD, I am in a short trade, close to the stop loss. It is what it is. EuroCAD still in, and yeah, just around break even. So Max says, Marco, it just wicks the low. You should be triggered. No, because I did not place the position yesterday. So I placed it, or sorry, when was this? Basically, I placed this position today at around, I think it was 3 p.m. my time. So I would have been in if I placed it this morning, but I didn't. So I'm looking for the price to retest this level. Okay, I'm personally not in this trade yet. Other than that, anything important to mention? Well, Bitcoin just was on the radar. I was looking to buy Bitcoin. Unfortunately, it just exploded lower, or maybe fortunately that I didn't get in because I would definitely have taken a loss. I was looking at this level of resistance, and I was looking for a potential break and retest. That was on my radar. Okay, potential break and retest. We tried to break through the level, had double wicks, sold off very aggressively, and now we're back in the range. You could have initiated a taco trade on Bitcoin. I think Nick is in this one as well, so he bought Bitcoin as well, I believe, which means you caught the dip. So if you did catch the dip and you aim to take profits at the highs, it's a pretty good trade, positive reward to risk. I like it a lot. It's not for me though. I'm not looking to take that position currently. I would prefer to see Bitcoin become healthy again, possibly break out of the highs and retest the highs. Okay, that would be the game plan for Bitcoin. So I want to see more momentum. I want to see finally a breakout. like a clear breakout of this level of resistance. That's going to be the game plan. Ethereum, I think, is just flat. Ethereum is kind of flat and boring. US oil is actually trickling lower. Interesting. DXY I'm bullish on, while for the JXY I'm bearish on. And you can see the reaction from the prime minister, from, I think, Takaishi. I think that's the surname. 10-year yields actually falling. Interesting. So the yields seem to be falling, which the US government likes very much. They don't want to see higher yields. I'm not sure why they're falling. I'm going to have to do some research. Let me see what about the 30-year. Same thing. What about the 2-year? Yeah, okay. All of them are falling. Interesting. That's about it. That's about it for my segment. If you want to get the Edge Finder, I use it every day. I heavily use it to build trade ideas. If you want to get access to the A1 Discord, trade signals, trade education, communication with me and all of the other traders, you can do so with the links in the description of the stream and with my discount code, which is MARKO. So make sure to check it out. Thank you very much for watching. Be careful with gold. I know there's a lot of comments I can see. You guys want to see gold. You guys want to trade it. You guys want to get in. Resist the temptation. Stay on the sidelines if you don't know what you're doing. And look at something that's a bit more stable. So look at something else. Join the Discord. See what we are doing. See what we are trading. See how we are positioning currently. And I'm going to tell you, most of the traders that I communicate with, read from, or research, they're not trading gold. They're not trading silver right now. They're being patient. So that's about it. Thank you, and see you in the next one. Goodbye.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.